Around the clock, around the world, Bloomberg keeps you connected. On television, online, on the radio, and on mobile.
Well, up next for Best in Class, we're joined by Eck Associates portfolio manager Joseph Foster. Foster manages Bloomberg Best Sector Fund, the Eck International Investors Gold Fund, which invests in gold stocks. It has outperformed 97% of its peers over the past 5 years. Joe, great to have you with us. A lot of people talking about gold, and in particular, what's going to happen to gold if the Fed moves ahead with quantitative easing? What's going to happen?
Well, we've already had what I would characterize as a quantitative easing rally in gold. From August through mid-October, we've had a strong gold market, record highs, and that was all on anticipation of quantitative easing. I think once the news actually comes out, I think we'll add conviction to the market. And I think, gold's in a bit of a correction right now. I think it can trend higher from here once we actually get the news of what the Fed's going to do.
What the Fed's going to do next week. So if we do see a pullback in gold, those who buy physical gold, you think that they should step in then?
I think this is a great time because, there's also seasonal factors at play, and usually gold is very strong as you go into the new year, so there's still time to get into the metal.
Okay. Now, you don't own physical gold. You actually think gold stocks are going to outperform.
Within our fund, yes. I'm fully invested in gold and silver stocks, and, we look for the leverage. We try to pick the gold stocks that will outperform gold.
Okay. All right. And I've got a couple of them. Agnico Eagle and Kinross Gold. Both of those are growth stocks. And some would say pretty cheap at this point to buy?
Yes. Well, there are two aspects here. Kinross I think, has the most value amongst the large gold stocks. So, and they've got a lot of growth coming down the pipeline with some of the acquisitions they made. Agnico has just gone through a period of very strong growth, and they're reaching a steady state production where they generate a lot of cash flow and set the platform for their next phase of growth.
Right, but if everybody's buying gold because they're worried about inflation, then is there really real demand, and how's that going to affect them?
Well, the demand has been, investment demand drives gold, and that's been the big driver. Jewelry demand, what we call fabrication demand, it's improved from 2009, but it's still relatively weak. As long as we have these, extreme monetary and fiscal policies around the world, I think investment demand will drive gold for quite some time. Okay,
drive gold for quite some time. So I've got to ask you about price then, before I leave you. Because people say, well, what price is gold going to peak at? What do you think?
Well, in the near term, I think we'll make new highs as we go into the new year of, towards 1,400 or more. Mm-hmm. In the longer term, I think we're in the middle of a long-term bull market for gold. So,
John Paulson says 4,000 for gold.
I'm not ready to say 4,000 yet, but 2,000 is definitely within our sights in the next 2 to 3 years.
Okay, all right, Joseph. Thank you very much for joining us. I really appreciated our Best in Class segment. Joe Foster.